It's the banks run the world. The rich run the world. They don't care if you're communist or capitalist. And so the banks love it. They love people who borrow lots of money. So how do I get rich? I borrow money and I buy assets with it. The poor person borrows money and buys liabilities like purses, cars, houses, and they get poorer and poorer and poorer. Rule number one in Rich Dad Poor Dad is the rich don't work for money. Most people miss that one. Well, that goes back to 1971 when Nixon took us off the gold standard and money became fake money. So anyway, my Rich Dad was preparing me to think about how can I make money without money? And the way I do it, I create an asset, like a book. I'm not saying write books because that's a tough industry. But I write a book today. I sell 50 licenses to 50 different languages, and I collect royalties for years, a long tail. So my money just keeps coming in. With that, I borrow. So let's say I make $10 in a book. I'll borrow $50 to invest in real estate. I step up my basis for depreciation. That's financial education.
Yeah.
That garbage they teach you about invest for the long term in the stock market. Why would I do that when I can make up my own assets? That's what entrepreneurs do. Every entrepreneur should be making up their own assets and staying out of the stock market. That's my point of view. But can everybody do it? No, of course not.
Sure.
I've screwed up enough times to prove I can do it. And my accountant will back me up. Yeah, the guy is an idiot, but he does create assets. Do you know why they tell you to save money?
I don't know.
Because the system of banking has nothing to do with communism or capitalism. So when you save, let's say you save $1 US or €1, 1 yen, the banking system can lend out 10. So the entire system is called the fractional reserve system. The fractional reserve system is also printing money. And then they tell you to save money. So they want you to save money so they can lend out your money 10 times. So your dollar became worthless 10 times over. And then they used to pay you 10% interest on your money. Now it's at best 1%. And they're still lending it out 10 times. So that's why you don't save money, is because your money is becoming worth less and less and less and less and less. The banks are getting richer and richer and richer. Then they tax you on that interest they pay you. That 1% interest, if they pay you that much. Japan is 0. And the Japanese are so stupid, they still save money.
We also have 0.
And they still save money. How stupid is that? That's what I would question. So how come that happens? Now, if I borrow money, guess what? Do I pay taxes on debt?
I guess no.
Why is that? This is what I'm saying, okay? Question everything.
Okay.
So when they lend out money, that's how money is created. Money is debt. They lend out, why is debt tax-free?
I don't know.
Because that's how money is created. And so the banks love it. They love people who borrow lots of money. But I use debt. I borrowed $300 million after the crash, dollars. In 2000, by 2010, I had borrowed $300 million to buy real estate. That made me rich. And the interest rates kept coming down, so that my cost of money kept coming down. And so everybody else is saying, oh, you should get out of debt. You know why? Because they don't question the hypnosis they're under. You've been hypnotized to work hard for money, to save it. The fractional reserve system prints it. And then you pay taxes after taxes. So I have all this debt and I get rich. Passive income is generally what happens when you invest in the stock market. I mean, portfolio income. So they say, well, I bought Tesla at 100, it went up to 200, and I sold it. So I made $100. That's portfolio income. That's taxed at the next higher level. So when I have passive income, it's tax-free. Getting passive income, you have to know what you're doing. So that's why I have the best, first of all, bookkeeper, accountants, attorneys, bankers. I operate as a team. Just like when we flew into combat, we're a team. And most people are trying to do it self-employed way. You know, I'm a good computer programmer. Good. You pay the highest taxes, you work the hardest, but you don't get ahead that way. But that's what most people, they want to do it on their own. You know, if you want it done right, do it by yourself. And an employee is always saying the same words. I'm looking for a safe, secure job with benefits and a paycheck and a pension. That's what they're looking for. The tax law are nothing but incentives, not punishments. So if you donate, I just donated money to the food bank because they're out of food. So it's $10,000. I get a tax break. I don't donate money to the food bank, no tax break. So because I have 7,000 rentals in apartment houses, I got a tax break. You know why? Because I'm providing housing. And because I have thousands of employees, the tax break. The government even sent me money to pay my employees. Yes, I'm one of those kids that don't like school. You know, school is good for people who like school. But here was my poor dad, head of education, PhD, on the governor's board of Hawaii and all this stuff, and his kid, me, and I'm flunking out of school because I can't read, I can't write. And I said I couldn't read, I couldn't write. I was bored out of my mind, you know. I was just, hey. So what I did instead was that's when I met my rich dad, who was my best friend's father, and he used these things called a game. See, games are the best teaching tools. See, when I'm playing this game, this is how the rich taught their kids battle strategies called chess. My rich dad taught me to be a rich man playing Monopoly. We played Monopoly hour after hour after hour. You know, the formula for great wealth of Monopoly is 4 greenhouses, 1 red hotel. So today in Arizona, I own 8,000 greenhouses and several red hotels. I just play Monopoly for real. So that's the power of a game, because a game engages me mentally, physically, because I actually have to move things, emotionally, because when somebody knocks me out, I better wake up. You know, I made a mistake. I am very shy, very, very shy. You know, I came back from Vietnam and I couldn't talk to people. And one day I said to when I decided to follow my rich dad's footsteps, I just said to him, I want to be an entrepreneur. He says, you got one problem. I said, what's that? I said, you're shy. I said, what's wrong with being shy? He says, you got to sell. You got to handle rejection. Number 1 skill. Can you handle rejection? Answer is no, I couldn't handle it. This was in 1973, I was 25 years old. And my rich dad said, how's your love life? He says, because you can't sell. Guys got it? So when I talk about what skill do you need, when the shit hits the fan, you better start selling. So I went to work for Xerox in 1974 so I could learn how to sell. It took me 4 years, and I was number 1. And today I'm a best-selling author. You know, most PhDs tell me I can't write. Yes, I said I can't write, but I can sell. If you can't sell, you don't make money, period. End of statement. You know, just because you have a product doesn't mean jack shit. But the important thing is you start. You know, I don't care what product you start with, but you start. You know, I started off with nylon wallets. Success wiped me out. You know, we couldn't sell, all of a sudden it took off. Then I couldn't finance because the sales kept going through the roof. Now, trouble is I kept borrowing and I couldn't sustain the sales. Next lesson. But that's how we learn. When I meet so-called financial experts today, most of them don't even remember 2008. They're so young, all they know is a bull market. All they know is that interest rates kept dropping, bond rates kept dropping, the price of stocks went up, real estate went up, everything was going up. You know, we call it the everything bubble. Be careful of the age of the person you take advice from too. Oh. So, you know, a bond is this. Let's say if a bond that's paying 10% is worth so much money. But if the interest rates, inflation goes to 20%, the value of the bond drops. And what most people do not realize, the bond market is 1 million times bigger than the stock market. The point here is back when I was just starting out, very exciting times. And that's what I'm saying is how old was the advisor? But this is the other part about it is so many of these idiots out there, you know, there's no cure for stupidity. We've seen a lot of it over our times. But this, I have the 60-40 mix. That means they have 40% this and 60% bonds. And they're operating by these formulas that worked right after 2008. This ain't 2008. The point here, ladies and gentlemen, this bond market is the biggest in the world. It is the thing that keeps this whole place floating. It's what's keeping this whole world floating. I want to go on record in Rich Dad Poor Dad, I said savers are losers. Why would you save dollars when they're printing it? Counterfeit money. It makes no sense to me. The reason dates are important is things are changing moment by moment. And the end is near. We don't know which way it's going to fall to. Give us those 3 things you got to look out for. One of them is, one of the things I'm happy about is I'm an old man. You know, and I meet these young, I feel for these guys. I mean, they're saying, oh, my dad gave me your book, Rich Dad, Poor Dad. You know, I'm investing in real estate. I'm doing this. And I want to say, we've seen the euphoria. right? And in euphoric times, you know it's about to end. A fundamental investment, people look at a financial statement, income, expense, assets, liabilities. That's fundamentals. That's Warren Buffett's gig. Technical, the ups and downs, basically the emotions and moods and the flows in the market. Now, the thing that's interesting is Buffett says he doesn't believe in technical analysis. And so we have my generation, we have so many people just follow, buy, hold, and pray with Buffett. Buffett's our God. And I go, are you nuts? You've got to look at advanced technicals. But anyway, that's the real market. It goes up and everything comes down. I don't recommend shorting because that is probably one of the riskier trades you can do because you're selling something. I took technical analysis and technical trading for 3 years and I realized I'm a real estate guy. Spent 3 years studying technical analysis. I'm a real estate guy. What does a short mean? To me, that is probably as high a risk as you can take. So let's say you see Apple shares at $10 and you think, I think that's going to go to 5. So you sell 1 million shares of Apple stock at 10, hoping it goes to 5 where you'll buy it back and all this other stuff. But Apple goes to 100. So that's where you get caught with your pants down because now you have to buy the 1 million shares you sold, but at a higher price. I just don't want to paint, I'm become a shorter. I tried it. I got my ass handed to me. The point is people need to get educated, but it goes back to rule number 1, make sure somebody's got over 44 years of experience before you take advice. I hear it probably 5 times a day. Some guy or a young woman will come up and say, my dad gave me your book and I'm going long real estate. I'm going, are you shitting me? Do you know what I mean? If interest rates go up, what happens to real estate? Down, right? People say, is it recession? So we're already in a recession. Depression's coming. And that's why you mentioned 1930. What happened in 1929 was the 29 crash. How long did that last depression last? 25 years. 29 to 54. Also, you're talking about the opportunity of a lifetime. And the reason having experiences, I own several tons of gold now. And I own oil wells. And when oil went from $30 a barrel to $130 a barrel a few weeks ago, I got stimulated. I said, oh my God. The problem with oil going from 30 to 130 just temporarily was it wiped out the middle class, inflation. And food prices are going to go through the roof because natural gas and oil go hand in hand. And that's how you make fertilizer. And all these greenies want to stop all that. I'm going, are you nuts? Are you nuts? Now, what happened to most of them was when they handed up the brains, they were missing in action at that time. Anyway, the point here is this. I was just watching CNBC, I think, and they were playing the hearings with Janet Yellen, and she's a greenie. She spent all this time talking about global warming, and I'm going, what about inflation? What about the war? What about the debt? And she's now a greenie. As you said, these guys are nuts, and we're listening to them. So that's why I own gold, silver. I have some Bitcoin just to speculate into it. But you have Treasury Yellen, you have Fed, and then you have this guy Biden and Kamala, the border czar. She's never been to the border except the Ukraine. So, it can't get any stranger than this. There's tortoise and hares. Guys who are short are hares, they're rabbits. Real estate guys are tortoises. And I'm a tortoise.